In this video, I'm going to show you one of the most popular indicators for day trading or short-term trading that shows us where the momentum of trade is, because if we know where that is, then we can try and piggyback off of other people's trading and the momentum of the chart to actually make some better probability trades when we are trading over the short term. It's called the MACD. This is it down here. I'm going to show you what exactly the MACD is, how it works, and then how we can use some of the signals that it gives us to make higher probability trades. I'll leave the timestamps in the description. If you need to know how to get set up on some pro trading systems and some other beginners guides, I'll leave all of those in the description as well. So what exactly is this chart down here? This is called the MACD. This is short for moving average convergence divergence. And it sounds complicated, but it's actually fairly simple. We take a moving average. So in this instance with the MACD, we're actually taking a 26 period exponential moving average, and a moving average is just plotting out a moving average of the price over time. And then we minus a 12 period EMA, exponential moving average. So that would be our MACD. And then what you do is you basically take a 9 period EMA of the MACD, and then that's called the signal line. So these are two moving averages that we plot on this graph down here, and you can see them with blue and yellow. So all they're trying to do is give us two lines. One is the moving average of the price, and then the signal line is trying to smooth that out even more to give us a signal. And then obviously what we want to see is, how is the MACD moving? How is the the convergence or divergence? How is the momentum of trade going? Because if we can try and piggyback off momentum, then we can make some better trades. How are these two lines either converging or diverging? They will give us the signals that we need to go ahead and place some trades. So you can very easily put the MACD on any professional trading software. If you don't have, Bybit or Binance or something like that, I'll leave them in the description. Bybit actually give you a deposit bonus up to $4,000, only in your futures trading account though. I use Bybit, but if you do use futures anyway, you can get up to $4,000 as a deposit bonus on there. But that's not for beginners, only for experienced traders with futures. Otherwise, use something like KuCoin or Binance. But what we want to do is put MACD in here, press it, and then it will come down onto any pro trading software down at the bottom. What you can see if you go to settings is that you have the 12 period and the 26 period EMA. So that will make up our MACD line. And then you have the signal line, which is a 9 period EMA. You can change these around, but I would suggest is keeping them as they are. Most traders will use them like this. You can obviously change the style to suit you, but this will come up with this now, which is the MACD. So what we want to see really is how the lines either converge or diverge, and that will give us our trading signals. So what you can see in the middle is the histogram, and this is just a graphical representation of how these lines are converging or diverging away from each other. So what you can see here is that the MACD line down here is moving down in a bearish fashion. The price is obviously coming down. And what you can see is the histogram is telling us that it's actually moving at an increasing rate away from the signal line. That tells us that the momentum is actually building and getting even faster to the downside, right? So it's not telling us where the price is, but it's telling us how much momentum that price has. You can see that the price is actually falling at a exponentially faster rate down here. But what happens is that the histogram is actually turning around, and this is telling me that actually that momentum to the downside is finishing now. So the momentum of trade is stopping to the downside. And what you can see is that the histogram is telling us that the MACD is starting to converge once again with the signal line, telling us that that downward momentum is finishing. What we want to do here is use this as a signal to potentially go long, because it's telling us that the price fall is now reversing. That momentum is reversing, and when the momentum reverses, it may obviously go back to the upside because chart is in constant flux. So what we're seeing here is the histogram saying the MACD is actually going away from this bearish move and starting to diverge to the upside. So we want to obviously enter a trade right about here, and then obviously ride that momentum through to absolute convergence, and then through to bullish momentum divergence to the upside. So this is the momentum that you want to trade right here, from bearish divergence to somewhat convergence and then bullish divergence. And you can see it happens here, and then up at the top right here, it's the momentum is starting to fall again, and that's like a signal for a trader to say, okay, well, this price move is starting to run out of steam. The momentum is falling, and so that's probably a signal to maybe start getting out again. So that is how we can obviously trade bullish divergence or convergence, and then use that as a signal to get in and trade. So let's look on the real Bitcoin chart and see what the MACD is telling us. And obviously this is, past events, because we need to have a look at this. What we can see down here in kind of late January is you got a massive sell-off of the price. So obviously not good, but we want to see, where's the momentum here and when is it going to stop? So you can see that the MACD line is obviously going way below the signal line. And you can see the histogram is telling us that we're having a very sharp sell-off to the downside. And so this is bearish divergence here where the MACD is falling down. But what we can see is that the divergence kind of plateaus here and stops. And this is a signal for a trader to say, hey, this price fall down here is basically coming to an end. Right? The divergence is stopping, and it's actually, that momentum, that downside momentum is kind of stopping right here. So what you can see really is that the divergence stops and we start to get this kind of move to the upside again, where the momentum is changing. So what you can actually do is potentially wait for the MACD line to cross the signal line. This is called a signal line crossover. This is one of the signals that you might want to see. When the MACD crosses, you can see it down here, when the MACD crosses the signal line, this is a potential trade for, going long, right? So you're seeing a bearish fall, and then when the MACD crosses up through the blue line, that would be a signal to go long, because the downward momentum has finished and we're actually going into upward momentum again. If you would have done that, obviously on this occasion, it would have been a very decent trade. You would have got in, let's say around about somewhere here, right? And there was actually a little fall in price here, which is fine, right? This is probably not even 1%. And then what we can see is that the price actually does move up, right? So the MACD on this occasion basically showed us that. And then what you would do is kind of ride that, potentially to where the convergence, divergence is kind of coming off again, right? So probably around here. So you would have made somewhere around this. So a few percent, you can trade on leverage or not or whatever, but that was a profitable short-term trade. Now you don't have to sell out here. You can obviously, ride it, but that's the signal, right? The signal is where the MACD has a bullish crossover up to the upside through the signal line. The next signal that we can get is kind of the same thing, but we use what's called the midline or the zero line for that crossover and for the signal. So I'll show you another example here. We have it on the Bitcoin chart once again. So again, what you can see here is kind of a sell-off. And that obviously creates an opportunity for people to wait for that sell-off to finish. See that the MACD is crossing over the signal once again, right? So the kind of reversal of momentum. But what we can see right now is that we can use the midline as the signal. And what we want to wait for is the MACD line to cross through the midline, and that may be our signal to get in. You can actually see that happened here, right at this level. So that is right around here, this price. So that's where you would have got in at, somewhere around 40,000 on this chart. And obviously what we're waiting for is for the MACD to essentially move to the top end of the MACD chart and graph. So our signal line, rather than the MACD crossing through the signal, is the MACD crossing through the midline. This essentially shows us that the chart is moving away from the bearish end through to the bullish end, and we're really wanting a just a bullish move up to the top, and that's kind of our move. And you can see what would have happened here is if you'd got in here, you would have had to have waited a few days. You get kind of a fake out here, and obviously then you get the move. So obviously we're waiting just for that bullish move, consolidation around the midline, and then a move, bullish move up. And then obviously you're just waiting essentially for that momentum to finish again. And when it starts coming down, obviously that's time, time to get out. You've ridden that move over the short term. Next, I want to show you how the MACD can actually help you spot a reversal and a trend change and potentially save you money. So the way that this would happen is what's called a divergence between the MACD and the price, and definitely would have saved you money here. So we're on the 30-minute chart, and what you can see right now is actually an uptrend for the price right here. And obviously, if you're looking at the price, you're thinking, wow, this is, great. The price is moving up. We're going to go long here. But what the MACD is telling you is actually that this really strong move to the upside is falling away. The momentum isn't there. And you can see this right here. So the MACD tells us rightly that we've had this huge kind of bullish move to the upside, and that corresponds with this price. But the MACD is actually diverging from the price right here. You can see the MACD is going down and hitting kind of lower highs, and that tells us that the momentum is fading away. But the price, just at this level, is actually still going up, right? This is called a bearish divergence. The MACD is telling us that even though the price is going up, the momentum is fading, and that can prevent us going long into a trade where we're going to get caught. Then what you can see what happens here is that we get this consolidation and a move down. The MACD showed us that on the chart, and that prevented us from going long and getting stuck into a trade that potentially would have moved against us. Or you can actually just have a short position at this level if you want to do that, and then ride that down and take a short and buy back at a lower price, if you're a more experienced trader. So we can use MACD in three main ways. All of them are about momentum. The first one is to spot a trend reversal where the MACD is right down at the bottom and we see it cross bullishly through the signal line, showing a reversal of a downtrend. We can ride off the back of that. The second way is to try and wait for the MACD to cross through the midline and then show us a kind of bullish move, right? So we're down here and we want to see the MACD move through the midline and try and ride a momentum wave up there. And the third is to try and find areas where momentum is fading and you see a divergence. When the price is moving up, for example, but the MACD is creating lower highs and moving down, that will save us from getting stuck where the momentum is changing, so we don't get stuck at the top. MACD is not going to be right every time, and there are a lot of what's called false flags or false signals where it looks like you're going to change momentum, but then it kind of changes back again. So you have to use it with other signals. For example, definitely support and resistance lines, as you can see here. These are going to help you as well. I've got some other videos about that, so I'll link them in the description if you want to know some further strategies as well. Check out the Crypto Investor course if you want to get kind of more professional and everything. I'll leave everything in the description for you. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.